Let's be great. Welcome to episode, I don't know what number it is.
71.
What numbers? It's 71, mothers.
Wow. Which is like 185 in Sam's mind. So we've done this 185 times.
I mean, are you saying I'm the inflator? What does that mean?
We're all inflators. We're all CEOs. We inflate everything. I have 150 million customers.
Not Sam's mind.
Yeah, QuotaPath just passed 150 million customers this week. You guys can congratulate me.
You're how QuotaPath. You're giving a talk at Catalyst. How QuotaPath got past 50 million in ARR in just 2 months.
I'm actually gonna go. Asad is giving a talk, and I heard that they're looking for a third panelist. That I'm going to go up on stage. Is that true, Asad?
Nice.
That's word on the street, buddy.
I'm gonna call you last minute. Like, come up here.
Yeah. What are you? I will be ready. I'm going to sit in the front row. I'm wearing my nicest shirt for you, Asad.
You do that.
Oh, it's nice. After Ange upgraded your wardrobe, I think your nicest shirt
Asad did.
Quite nice.
Well, Ange did, and then Asad also sent me a few things.
Oh, so he sent you clothes?
No.
I sent him links to go buy.
Oh,
you spend the money. I'll tell you where to spend it.
Somebody send me some clothes. I want some clothes. Welcome to Topline, the podcast for the best founders, operators, and investors in B2B tech. Every week, AJ Bruno, Asad Zaman, and me, Sam Jacobs, will break down what's important for you to know to be the most well-informed professionals in the market.
If you're looking to revolutionize your account-based strategy, then look no further than Terminus. Taking a unified approach to ABM, Terminus offers an all-in-one platform to streamline your sales and marketing efforts, enhance customer engagement, and drive real results. With features like advanced targeting, robust analytics, and seamless integrations, Terminus empowers your team to work smarter, not harder. Don't miss out on the future of unified go-to-market. Visit terminus.com today and take your go-to-market strategy to the next level. If any of you ever need advice on where to spend money, I'm your guy. I will tell you where to blow some capital, no problem.
What are your let's quick test, Don't say Dolce & Gabbana as your first
Versace. I think Patrick Ashraf is really good. It's underrated. People don't wear it enough, but I think it's like the best t-shirts, the best like standard stuff you should own. It's like the highest quality, nicest stuff, doesn't shrink. I think that's really nice.
What's wrong with my Chris Stapleton shirt? Are you making fun of my Chris?
I think they look fantastic.
It's really good for if you were taking a nap or sleeping at night, like that type of t-shirt.
I went for a run. I did a 5-mile run.
Have you guys followed the news today?
I got lost on my run this morning. What's that?
There is a $24 billion man in the world right now. Do you guys know who he is?
$24 billion man?
Yeah.
Where does he rank in the overall? Maybe that.
No, he's a $24 billion man. Doesn't mean he has 24 billion, but he's a $24 billion man.
That's what middle class is today. So he's middle class.
So Starbucks just announced their new CEO.
Oh, then the Chipotle guy.
The Chipotle guy. So check this out. They announce it. Starbucks stock pops up 21%. That's 18 billion. And Chipotle stock is down 8%. So that's a combined 24 billion. Isn't that intense? You're that good that the market moves 24 billion because of you.
That's pretty cool.
That reminds me of Succession. Both of you watched Succession, I'm sure.
Yeah, yes.
But when Logan, oh no, spoiler alert. If you haven't watched Succession, close your ears. But when Logan kicks the bucket and...
That is a big spoiler alert. That's not even a small detail. I've seen it. I was wondering if I was is he going to say that Logan dies?
Say that.
Basically can't watch the show now.
But isn't it fair that a few months after it's done, if you haven't watched it by now, I'm sorry. I'm sorry.
Damn, for the record, I said kick the bucket. I literally meant in an episode, he kicks the bucket.
You did that noise really well. I would say you did the... That was nice.
So when he does it, they pull out their phones and see the stock drops 35%, and they go, "That's Dad. There he is.
That's Dad."
Yeah, I remember cool. That was a great moment. I subscribed to this Instagram account, which is just scenes from Succession, and it's just It's just great. Like the scenes, the acting, the dialogue.
The writing was like exceptional.
Yeah,
so there was another guy, I knew of this person. He left a publicly traded company. He was a CRO. Stock drops 5%. The company that hired him, they're like, we've hired a gangster. It was a Series C company. Goldman had invested in this company. So they feel like they've got the best person. Stock's down 5% from where he's left. On day 2, he calls his EA into the office. He's like, I can't read my email. She's like, Gmail's right there. Like, I can see it. What do you mean? He's like, no, my personal email. She's like, oh, Chris, you aren't logged into your personal account. He's like, but I'm on Gmail. She's like, on your work email, you have to log out and log in. And he's like, So she leaves to go tell the CFO that I think we made a mistake. She walks into the CFO's office. She's like, this guy is not very smart. So right then, CFO gets a call from the IT department. You won't believe what the new guy just called us asking. This is after she told him what to do. He called IT. He's like, I can't access my email. So just because stocks drop doesn't mean that you've got a gangster every time.
So what do we think happens with this guy from Chipotle? Is he going to crush it?
Undeniable. Yeah. This guy's good. And Starbucks needs a change. So
the both of you listened to the Howard Schultz acquired episode, right?
Yeah,
I listened to the first half of it.
It's 3 hours. I mean, it's no joke. I'm impressed at the research that they did. Like, both of them were like, pull out these stories, and they're like, Howard was like, did you go through my desk and from Starbucks or something to pull this out? It was pretty impressive. So
they did 8 hours on Microsoft. Imagine how much research they did there.
Did we talk about how we did talk about that last week, how the Lex Friedman, Elon Musk Neuralink thing was 8 hours.
8 hours. That's
a lot.
When I do an hour and a half with you guys, like I need a minute to reset.
That's a lot. And I'm like, how does anybody else have the patience for it? It's got to be 1.5 speed, obviously.
Which one of us, Asad, is it like where you're like, okay, I've had enough of this?
Me, like just me, like being so on. Then I look at Joe Rogan, who does 3 hours. He works out like a maniac. He then goes and works on his stand-up. He's at the Comedy Mothership, which is his venue that I'm excited to see when I'm in Austin. He goes there every night and practices. This guy, like when you think about all the things he has the endurance for, it makes a really good case for steroids. I'm really thinking about it now.
You heard it first here. Joe Rogan.
Some level of steroids is probably good for you. I mean, I think it depends.
I want that rock.
People take testosterone later in life.
Yeah. I think
we start talking about the markets and GTM.
I thought we were. This was it. We're nailing it.
We have George Britton from London is a new Topline fanboy, and he loves our banter. So, hi, George.
George. Okay, so let's jump in. We've got a couple of things to chat about. We've got some data on how tech companies are performing. We're going to talk about motivation. Whose job is it to activate it? Can you activate it? Should you even try? But we're going to start with the big news in the tech ecosystem, which was the Google Antitrust ruling. And what we're going to try to do is contextualize it to our slice of the world. So some background for those who are not following it. This case was brought forward by the DOJ in October 2020. Essentially, what they were saying was that you have a monopoly in search advertising and search in general, and you're abusing it. The nuance there is being a monopoly is not a problem. Abusing it is. It's a tough needle to thread for anyone. And what they were specifically pointing to was that Google had agreements with device manufacturers like Apple and Samsung, where they would pay them to be the default search engine. Now, Google's response to that was that, our product's really good. Consumers like it. Even if you gave them a choice, most of them would pick us. Even if you look at Bing, the number one search item on Bing is Google. People get there by mistake and then go and find their way to Google.
That's a great little factoid.
Isn't it? Yeah, I have all of them today. The other thing that they said is that there's tons of competition in the market, and the markets always move. 10 years ago, Yahoo was worth $40 billion. Now it's worth nothing, or it's nothing compared to what it was worth. So these markets evolve. But at the end of the day, the US federal judge, Mr. Amit Mehta, found that, yes, you did abuse your monopoly position. These agreements were restrictive to innovation and hence harmful to the average consumer. And now we're all waiting to see what the punishment is going to be. This is the most important case of its sort since the Microsoft and DOJ ruling in 1999, and will lead to implications on set precedents for cases against Apple, Amazon, Meta that are in play right now, and could also lead to regulations and standards that the rest of us have to now abide by and wrestle with. And so while we all wait to see what the punishment is, I think the question becomes that, are there any implications, and what might those implications be for our slice of the world, for companies that are on their path to or at 100 million in an ARR? Sam, what are your thoughts there?
I think two things. The most monopolistic practice I know of is Apple's 30% take rate on in-app purchases that come through the App Store. But I definitely do think that when I was reading the summary of the case and then scrolling through the decision itself, I felt two things. One is that this is monopolistic. I do feel like, unlike the FTC blocking these large acquisitions, which I think have been a lot of wasted energy and have really been provided, a chilling effect to the broader tech ecosystem, I do think that this is somewhat helpful, I suppose, in helping create at least some kind of environment, creating some oxygen for entrepreneurs to build new businesses, because I do think that Google acts in a monopolistic way. At the same time that I find government intervention of this type often backwards looking, because I can tell you that Google is, well, I can't speak for Google. I can just say that I would posit that that a bigger concern, or at least an equally sized concern to whether or not they're being called a monopoly in search, which of course they are, is that search itself will be replaced by whatever, I forget the paradigm name for it, but basically answers.
Answer engines.
The fact that, you ask an LLM the answer to a question. And by the way, I've been doing this more and more and more. When I'm aware that there's a search response that might be interesting, but I'm beginning to, and I don't even know to what extent, I'm always cognizant that I'm not sure I should be trusting ChatGPT as I ask it a question, but I certainly ask it a tremendous amount of questions that I used to search for. And the reason I don't do that anymore is because it's really hard getting to the accurate organic links. The top of the screen is so filled with sponsored links that Google is so heavily monetized that you're never quite sure that you're actually clicking on the thing that you want to click on. And there's that famous bit about recipes on the internet, and how the way that you SEO for recipes is you have to have basically like an overview, like a bunch of noise that nobody cares about, so that it indexes appropriately. And I think so there's some reason why. And basically you don't get to the actual recipe for the thing you're trying to cook till like 3/4 down the page and a ton of pop-ups. Yeah. And I think this is, so, the DOJ can tell Google it's acting monopolistic and try to impose a bunch of penalties on how searches, and it's legislating and regulating the past, because the future is not about any of that. It's about how search as a paradigm is being replaced by answers. So, I think that's a funny commentary on government intervention generally. That doesn't mean I don't think that there's a need for regulation in capitalism, and I think capitalism unfettered is a bad thing. And I do think that Google acts in a monopolistic way. And I think on the margin, this creates an opportunity and an opening for more entrepreneurs, although they're appealing the decision. That's what I think. What do you think, AJ?
It's so funny that, first off, this case was brought by the DOJ, 3 years ago? When did this first land? Yeah, 4 years ago. So these things move so slowly. So while the decision is there, the appeal process is probably going to take twice as long.
Yeah, and we're like 2-3 years away from this being done.
And Sam, to all your points,
it just seems mismatched between the pace of technology.
Exactly. That's my point, is that it's just the time scale of this is just not going to keep pace with the things that you're talking about, Sam, that are just True. By the way, I love clicking on all of those ads on recipes. Like I just like, I'm scrolling down. I'm like, I would love. Oh my goodness, that like dehumidifier that makes rain sounds. I'm just all
you
about
need that. You need 3 of those. Let's go.
So
it's an interesting point that you guys are making around the free market. That right, like by the time that you can actually have a legitimate, strong case against one of these companies, the market might just take care of it itself.
The market's going to be the great equalizer to it. You brought up Yahoo, Austin. I had to laugh. I was like, was that before or after Marissa Meyer during her time? You forget about some of these things that have happened, but that was huge news at the time. And it's innovation. And like, I think I'm seeing more on Reddit about Firefox than I've ever seen. Of course, we all know DuckDuckGo, which is interesting.
Yeah, they were one of the main plaintiffs in this case, or at least one of the main proponents of saying that this was monopolistic.
Whereas Firefox actually makes most of its revenue. Mozilla makes most of its revenue from Google, actually. So one of the big things is that the Mozilla Foundation might actually not have the type of revenue they need to sustain themselves after this. That's a whole different topic, but yeah, this might be the end for them.
Asad, what do you think? What do you think, Asad?
I think it is helpful from an M&A perspective for, I think, earlier stage companies. So what I mean by that is that large acquisitions are just not going to be able to go through. If you're Google and you even try to acquire a company, we wrote about this in the Topline newsletter a lot. I think companies are going to be afraid to go down that path with you. And I think the chance of it getting blocked is really high. And some of these acquisitions, like the Wiz one, was actually in favor of competition in the market, but still it was something that the other party walked away from for a number of reasons, including their own desire to build a great company. I think when the big ones are not possible, small ones happen more. And I'm happy for founders of companies that are 10, 20, 50, 60, 70 million in revenue, because I think there will be tons of those deals that now happen. Companies like Microsoft, Meta, etc., acquiring them. So I think there's a positive over there. The thing I worry about is just the regulatory burden for early growth stage businesses. What I don't want out of this is things that become a burden for companies that already are fighting a really tough fight. And I'm always afraid that these things lead to downstream implications for the rest of us that shouldn't have to deal with those regulations right now. So there's a positive on the M&A side. I worry about the regulation side.
Yeah, I think that the thing, though, that as you come down market, and we'll say down market public companies, so Google's on one side, but look at Twilio and their activist board, Zendesk activist board. And I just know there's a lot of these smaller, Twilio buying Segment. I don't even really know where that's landed right now. Have they fired the CEO, right? And then the founder CEO, and everyone talked about how much that was a mistake. And so I think a lot of these companies that are at market caps, probably $1 to $10 billion, which is down market for what we're talking about on the tech sector. I wonder how much of them are just like kind of holding the line and not ready to move just yet because of their boards, and their boards just being very cautious and careful in the market still.
The other thing that I thought was interesting as I was looking into this is just how difficult the job of Google CEO is today. Now, obviously, he makes a lot of money and he's well paid, but the amount of fronts that they have open right now. So they have a culture problem that they've been trying to fix. They've got this AI war in which they are behind and they have to try to catch up, and they're getting killed by people in terms of this particular part of the business because they were in the lead and now they're behind. They're fighting this court case and it's draining. And in that Microsoft acquired episode, one of the things that was really interesting was the impact of the DOJ case on Bill Gates. It essentially just killed Bill Gates. And then for the next 10 years, the company was just languishing. It wasn't the Microsoft we know today. It took 10 years to get over the hangover from that. And I guess the thing I was thinking about is, as a CEO of a business of that sort has to be such a master at being able to context switch, to be able to get out of the frustrating mindset of dealing with one problem and still tackle the other situation with this positivity, with a clear mind. And I was wondering if you guys think that context switching is like endurance, like you can train it and develop it, or is it more an inherent thing? Some people are better at it and others aren't. Like Sam, what do you think about that?
It's a great question. I think most things in life can be trained, but I don't think that makes them easy. And I think there's a certain personality type, and I don't know if this is true writ large. I tend to think that there's a difference between a founder personality type and a manager operator personality type. And I would assume that Sundar or even Satya are better at managing that context switching. Perhaps I could be wrong, because they are less emotional. Both of them seem somewhat robotic in their behavior, even though they both seem like good people. I have no basis to judge that on, but I find that professional operators value process and take comfort in operating systems and the discipline of daily rigor for me more than, now again, this is just like, I'm saying that I represent all founders, and I don't know that that's true, but I will say that, as you've pointed out to me offline, privately, Asid, that the beauty Pavilion is imbued with my personality in a very deep way, and that has its pluses and its minuses. It's impacted our growth in both ways, positively and negatively. So for me, context switching, like, could I maintain my enthusiasm, my focus, my positivity as the CEO of Google when there's, as you said, a variety of different fronts? Your core search business, which has been this monopoly that you have been protecting, is still immensely profitable, generating tons of cash, but is under attack. These businesses that you were supposed to be the leader in, because you were telling people you bought DeepMind, you're investing in all of these, you just built a computer engine that can win Chinese Go checkers or whatever, or Chinese Go. Sorry if I mispronounced that. But the point is, that seems like, I agree with you, it seems like a really difficult job, and it seems, I don't know if it's genetic, but it seems like it would be very hard for me, because what I think it requires, and this is feedback that you get all the time, what being a CEO requires is stability and consistency, and the ability to project the right level of enthusiasm and positivity on a consistent basis. And I'm not world class at that. I'm pretty good at having ideas. I think my superpower is probably authenticity and connecting with people in a meaningful and deep way, and hopefully connecting with them in a way that inspires them to do something or change or join my club, I guess. But it's definitely not consistency. It's definitely not stability. And I certainly don't love the act of management, the act of holding staff meetings, the act of soliciting feedback, the act of synthesizing feedback in an efficient and regular and consistent way, so that we're not erratic in our decision making. I've gotten better at that, though. I've gotten better. So I think it's a learnable skill, but I think temperamentally, it's the difference. It's how some of these people need to be programmed. Even the former Alan Mulally, who is the former CEO of Ford and was the CEO of Boeing, guys like Bob Iger. I look at those people, they just seem like they manage their emotions in a different way. Maybe it's a learnable skill, but I don't know. I'm 47. I'm quite old at this point. Like, I don't know that there's some brand new skill I'm going to learn. These people that I'm referencing, they were successful at my age being them, having their hair perfectly coiffed, everything down to the button, down to the inch, down to the centimeter. So to answer your question, I think it's a learnable skill to a degree, but I think there are athletes. I think there are people that are really, really good at maintaining composure and are just even keeled in the face of the storm. And that's not me. I think it's more AJ, though. AJ, what do you think?
You speak for me, Sam, on this.
AJ, has this, founders. You are, I think, just we've all hung out now so much, right? Like, if you think about 71 episodes, we hang out for an hour and a half into 71, so we get to know each other really well. You're definitely good at this in terms of classically defining a CEO. You're very good at those things, but you're also good at context switching. Has that been something that you've noticed was just inherent to you, like Sam is saying, was a superpower from day one, or have you had to work on it? What do you think?
I think it was the number one thing that I've worked on this year. I'll actually even go that far to say it, is that At the beginning of this year, I felt like I was drowning in context switching, and all of us had company changes and had headcount disappear. So we had to take on more from CEO standpoint. And I had to take on marketing. We had some changes in product, partnerships, and what we're doing with some of our bigger partners, running the business, the vision aspect of it. And then, we're investing heavily in Topline. So like this is an area where it's like we are always staying in the top of the market and what's going on. And customer conversations, I have 5 to 6 customer conversations in any given week, travel and conferences and speaking and all of the things. And this was a topic of conversation on my 360 feedback this morning, where Kelly on my marketing team was like, I don't know how you do this. Can you teach me how you do this? And one of the things I was like, Kelly, there's a handful of things that I've relied on. First off, the easy button answer, which is the dumb one, which is the good one, is just you find people in the organization that you trust and rely on and can get things done. And then you don't have to worry about that thing getting done. So that's one easy button answer. But in absence of the easy button, I think the tactical things that I've just been able to do is get ahead of my schedule. I know we've talked about this. I just really feel like if I go into a day and I'm not going to be energized by any meetings, I'm like, what am I doing? I'm just not going to have that day. The other piece of it is that in the morning, I've done 2 things. One, because of the book Clear Thinking and other things people have told me, I have just straight up said allowed an hour to myself in the afternoon. And running is my thing. Right before this conversation, I ran and had a great 5-mile run. It was fantastic and allowed me to think, so I can come into these conversations in a much better way. The other piece of feedback that I got is pausing. I've just gotten way, way, way better at pausing and slowing down rather than reacting to things. And I think that has helped my context switching quite a bit, because it's helped put swim lanes and compartmentalize and be more objective about things and not as emotional. We've talked about this a lot. All three, Sam and I probably share this the most, which is just very emotional about our business. We're passionate about our business. But passion can be mistaken for fear. And so when you're having these conversations and you're passionate about something, you don't want to be frustrated or angry at a certain person, but over Zoom or whatever, it can come off that way. It's both a blessing and a curse. I can take a pause because I get a Slack or an email and I don't have to respond to it right away. But if I'm on a Zoom, context can be lost because of the fidelity of Zoom. So it's both of these things. All of that to say is it's something I'm greatly working on and continuing to work on. And I appreciate that you both have said that this is a positive, but I still look at it as it's not quite my strength until I really feel like I'm at an outstanding bar with it. And I don't have days like I did yesterday where I felt like I was being attacked by something and actually had an emotional reaction to it. And I looked back and I said, you know what? Shouldn't have done that. And I apologize to the person that it was in a one-on-one that I was like, hey, I didn't mean it to come off this way. I was really thinking about it this way, but I understand I shouldn't have gotten more emotional about this thing because it felt like we were having a wrong conversation. Immediately realized that we all have these moments. We're just human beings.
That's a really important point. That's where I'm. The dynamic is judgment is so complicated because on the one hand you want to improve, but you also need that inner voice to be kind and to say, it's okay to be emotional about your business. One of the things I was talking to Asad and he was talking to me about, again, I've gotten this feedback from a few different people I trust, which is, remember that the things you're trying to correct about yourself are also the flip side of some strength that helped get you here in the first place. And that, the more I try to be some robotic automaton that's always even keeled, well, that got me here. And, even the relationships in my life that, where I feel like, there was injustice or, I was a victim. I was victimized in some way. First of all, I chose those relationships. And second of all, they propelled me. They form part of my life experience. And part of my life experience is what brings people into Pavilion and this sense of identification with the ups and downs. And so it's really, I don't know, I think about that a lot. It's where's the judgment line of yeah, there's a piece of feedback that I get that that I want to action. And as I've mentioned a few times, on this show, and at the same time, I've been told that I'm moody, and when things are going well, I wear my heart on my sleeve, and when they don't, I wear my heart on my sleeve. And that's just not feedback. It's just like, how do I deal with that? That's, I think, the ninja class, the gold star, the elite level of synthesizing that feedback is figuring out, how is it relevant to me, and what do I want to do about it, and just being intentional about it. And part of that might be, I think I might have mentioned this, but at Axial, Alex Steinberg and now Alex Badavis, she used to say avocados, like her and Kara Grenier, when I was in a pissy mood, when I was being like surly or I was being down, they would say avocados. And that was like, okay, that's a mechanism we've constructed so that they can let me know that I'm like kind of bringing the rain cloud around and I'm pouring it on people. And I should just be aware of that. Maybe I can pull it back.
Sam, mangoes. Mangoes
means I said something really, really brilliant. I'm intrigued. You want me to say more?
I think.
Also, what do you think?
It's so important to not just flippantly take any advice that you get, because you might end up dulling the thing that actually is a strength. And what you need to do is learn how to manage it. So taking a pause is managing it. Making it so that you're robotic is killing that thing. And there is a difference. I think people need to spend a lot of time there. The thing I was thinking about was how what's helped me recently, very recent, is we're just about to publish edition 11 of the newsletter. And it's the first time that I've so consistently written long form. Like, obviously in school here and there you would, but every week writing close to 1,000 words, it's had an effect on me. And so I started researching, like, what's the effect of writing on your brain? And there's something fascinating. So the style of writing that you use most often is how your brain starts thinking. So an extreme example is if all you do is text or Slack and you're quick and short, and that's how your brain thinks. And the opposite end of that spectrum is if you're writing long form, your brain can actually then hold a topic and think through it a lot better. And I have noticed that in writing this news, and it's been a really hard process. Like, it's been hard to get to a point where now I feel like I can efficiently do it and it's really enjoyable, etc. But it was really hard to get to this point. I can think better now. And so I'm just able to manage myself through situations a lot better and control the erratic reaction that I can sometimes have to something, and be able to just have a rational.
You're probably less anxious, right?
Because of that.
The anxiety piece of it is.
And then the other part is that in doing Topline, all of Topline, one of the things that I think about is, it's not just doing the steps. This is not like just go to the gym and you have a bad workout, at least you in the gym. It's like you got to do things really well for it to work. And so creativity, how do you nurture creativity? And in meditating on that point, which essentially means journaling on it a bunch of times, it's actually I've convinced myself to give myself space to like nurture my soul a little bit more than I used to be creative. And that's also made it so that I feel less. I think of it as there are moments where I think I can be erratic and I don't want to be erratic. How do I minimize that? And it's helped. So those are things that came to mind.
My biggest problem is sitting still, as I think you both have commented at different times that, maybe I do have ADHD or some kind of, and I think it's, I think it's learned behavior. I don't think I started off this way. To your point about how you write, all of these one sentence, little pithy lines on LinkedIn, like the LinkedIn writing format of like just trying to like, make a snappy comment and then like break and then another snappy comment. Yeah. Plus text. I don't know, your neuroplasticity, like your neural pathways reform based on habit. And I think that's something that worries me.
It's dangerous.
I'm losing the ability to just sit still. Even right now, I'm crossing my arms so that I just don't pick up my phone. I just want to stay focused. And it's become the hardest thing in the world, is just to sit still and not let my like I've this nervous kinetic energy, like, jolt me around.
It's why I have that, right? Like I'm very fidgety. Even when I sleep, sometimes my feet are moving. Or I've been told. I think that's why you have to exercise a lot. You have to get it out of you. You have to. It's not a nice thing to do. It's not a luxury. It's almost like it's part of how you manage yourself as a human being. It's
think about our kids though. Like we're talking about this for us as adults, that we can change these behaviors. These are not learned behaviors when we're growing up, but for our kids that are on TikTok or Insta or Roblox or Minecraft or whatever, to get that like next thing and just like grind themselves, grinding to get whatever they need to get, that little
dopamine hit is. Yeah, exactly.
Yeah, that's the thing, that the anxious, what is the book that's called? Anxious Society or something.
Anxious Generation.
Anxious Generation.
Yeah.
Yeah, exactly. That is that in spades, that we are allowing our kids to just go unfettered into the world. And yet,
do your girls have smartphones, AJ?
Well, our oldest at 11 does, and we definitely have boundaries on that. But we just picked them up from camp on Saturday in 2 weeks with nothing, just to go outside and like be kids and do all the things, horseback riding and archery and canoeing, and they had an amazing time. But they came back, and this week they're home and I'm traveling, and my mother-in-law will watch them tomorrow. But like what are they going to do when they come back into the house? They're going to go back to YouTube. They're going to go back to TV.
These things are addictive, right?
Oh,
it's like,
I think we need a week without phones.
Yeah, detox.
Yeah.
Kareem's silent retreat is sounding really good right now.
Like a digital detox.
That really stuck with you. That touched some kind of nerve.
I like the more I say it, it's like
competitive. You felt competitive.
Well, it's one of the things when you say it's like it sounds ridiculous, but the more you say it, you're like, actually, this sounds like a brilliant idea. I'm going to go.
I heard it's wild. I heard it's wild because I heard my friend did it, and like you're literally going crazy like the first day and a half. And then apparently like there's some moment that's like day 2 or 3 or something. And all of a sudden you might be like sweeping the floor because they have you do, if it's like any kind of like Buddhist kind of deal, they have you doing, chop wood, carry water. They have you doing chores. And all of a sudden, like, it's like some switch flips and like total consciousness.
Yeah. My aunt and cousin went together.
Yeah.
My aunt and cousin went together. My cousin was like, this is a mother-daughter thing to do. And so they went, and my aunt was like, okay, you and I can talk. So here's the deal. We're going to talk throughout this. Like, we'll communicate. We just won't do it with the rest. And so this poor thing was there for 10 days, but didn't get the experience and didn't have any of the enlightenment.
I'm sorry. That is... Don't go. That's so insane.
She's like, the two of us, side deal.
Are you ready to revolutionize the way your team goes to market? Join us from October 14th to 16th in Austin, Texas for GTM 2024, the premier B2B SaaS conference where the world's top go-to-market executives learn, plan, and execute strategies that fuel growth. Expect 3 days packed with interactive sessions and panels addressing top-of-mind challenges, hands-on planning and forecasting workshops for 2025, and of course, plenty of networking opportunities. Whether you come alone or bring your entire leadership team, you'll find valuable insights and dedicated time to prepare for the year ahead. And be sure to stick around Austin for GTM 2024 awards, celebrating the top leaders in our industry. Ready to get a line and get ahead? Visit joinpavilion.com/GTM 2024 and use the code Topline for 15% off your ticket. Details are in the show notes. Hope to see you in Austin.
Okay, let's transition to the market a little bit, because there's been a combination of interesting bits of data that have come out, and I'm curious to get your thoughts on it. So David Spitz shared some data over a week ago around net revenue retention. He basically looks at this bucket of 50 publicly traded companies, and he looked at median NRR in 21, 22, 23. And it's basically a downward slope. So it's 121% in 2021. The median got down to 117% in 2020. and then 108% in 2023. From a go-to-market efficiency perspective, companies are spending roughly $2 for every dollar of new ARR. And there's a slight improvement from Q1 to Q2, but marginal.
And this is annualized. So basically, like, these public companies have at best 2-year payback periods.
Yeah. Right. Actually, later on, I was going to share Monday. So Monday.com released some really strong earnings, 34% year-over-year growth in ARR at about 236 million a quarter, 110% NDR, 22-month CAC payback, which is it's a lot. Now, they hit profitability and they've guided pretty strong performance for the future. The stock shot up 12%. Something that was really interesting, let's click into this. We'll come back to the rest of the data in a second. 70% of Monday's customers are non-tech companies. And so, AJ, how important do you think it is now for tech founders, even at the early stage, to diversify the segments they sell into? Because it seems like it's high risk, high upside if you only sell into tech, but it's not easy to build when you're under 10 million to sell into a variety of sectors is also not that easy, right? A lot of content switching over there. So, but do you think this is now just critical that one has to do it?
Well, it's coincidental that we're talking about this because I actually spoke with the head of partnerships at Monday.com on Friday, and you and I, Hasid, will see her this week. Olga will be there.
I'm so excited AJ is there because I hate socializing, so I'm just going to hang out with AJ and meet cool people.
Let's just hang out behind.
I think it's very interesting that I didn't get invited to this.
For the million places you have to travel to, you're actually upset to not have to go to another one.
I don't want to go, but I want the invitation. I'm not mad at you or AJ. I'm not. I'm just saying there's always this like weirdness between, partnership leaders and Pavilion. Like there's just like this kind of like frenemy kind of vibe.
Interesting.
I just find it odd.
Let's get Asher and talk about that.
I definitely think he doesn't want me there. I think
really?
One time I was like, I should come to Catalyst sometime. And he's like, you wouldn't be interested. I'm like, I think I might be interested. And he's like, no, I don't think you'd be interested. I was like, no, but I think I'd be interested. He's like, I don't think so.
I'm pretty sure you won't like it.
So Monday.com is, I'm not going to share like.
Asher, if you're out there, I love you, brother.
Yeah, Asher, we'll relay the message, Sam.
Please.
I'm not going to share
start some feud, do a Kendrick Lamar Drake kind of deal.
Like Exit 5 versus Pavilion versus this thing.
I'm not going to share some of the specifics on terms of the overall numbers, just the trend to what you're saying, Austin, which is like Olga literally said this for Q1. She talked about Q1, so numbers that have already been released, and just how they have seen their adoption globally. Monday.com is a very global company in like ways that they had never seen before on CRM and horizontal, and how customers are using it. And I think about this with Clay was very much a templatized. They definitely have a lot of people that are fans of Clay that have gone and said like, hey, we're going to build these templates, and then word of mouth. And Monday.com works a very similar way, that people have built like CRMs within Monday.com and shared that out. And that has just spread. And they're starting to see both the down market and up market upstream opportunities where I think this article that Brian Halligan wrote was saying that like he never saw that HubSpot, the first time that felt like HubSpot was an incumbent and to some of these. And it was talking about an AI player, but Monday.com can be put in this as well, where it's a lot of organizations that are just so tired of having to spend a ton of money implementing, a ton of money having solutions consultants, a ton of money just to upkeep it. And this isn't just Salesforce. This extends across every medium. And so, yes, this horizontal, we've seen it with QuotaPath. I mean, guys, we may go to RoofCon 2024. I'm not even kidding, because we have so many solar and roofing companies.
That's so interesting.
I love that.
I'm dead serious about
cool.
this.
So to what you're saying, we all talk about HubSpot. HubSpot does 800 and something, like how much in revenue?
3 billion, I think.
3 billion. No, not 3. 2. I think 2.5.
Yeah. So HubSpot is now.
They grew from like
2.1 billion. Sorry,
4 months ago.
There's Zoho, which is this 20+ year old company that does $1 billion in revenue, highly profitable, privately held company, and What I find interesting about it is that when you look at these other countries, when you look at the developing world and the third world, where there's still a need for things like CRM, even when a company like Microsoft or Salesforce discounts the product for that market, when you add the exchange rate to it and the type of inflation these markets see, like a lot of these countries, Pakistan sometimes has had 10, 20% year over year inflation. It's not affordable to people. And so things like Monday that are very customizable, Zoho, very customizable, very cheap, these are very attractive tools to people at company sizes that you wouldn't think they would be attractive to, like up till the mid-market even. And really these other traditional players or your enterprise players in these markets. So AJ, like if you were meeting an early stage founder and they're like, hey, they're trying to get some advice from you, are you saying start by selling into multiple markets? Not geographies, like segments of the market, like non-tech as a segment.
Well, you guys know how positive I am on starting and building companies SaaS. Right now.
Yeah, he's very bullish on this.
I'm very, very bullish on starting companies. I think I actually go the other way still. You just got to be very specific about that value prop and that use case that you're solving for. I'm not saying go build a vertical SaaS company. I am not bullish on vertical SaaS right now. I'm just saying that, like, figure out the persona more.
Why aren't you bullish on vertical SaaS?
I think he's always, the context for AJ is always venture capital backed, right? Am I right?
Yeah, that's my position on it. Is just like the TAM aspect. Yeah. And so I think if you're going to go start and I know you both probably have a little bit of a different perspective on VC, which is like, if you're going to bootstrap, then like vertical SaaS isn't a bad way to go. If you're going to go build a $5 to $10 million company and then you sell it for 50 to 100, makes a lot of sense. It's actually a lot of, but the context of Sam's right. By the way, I texted you both the RoofCon 2024.
Yeah, I saw it. I was going to click on it, but I'm trying to stay focused.
I know, they're just awesome. They're amazing. I think Asad, let me like reframe this. What is the end game? What does this lead to in SaaS and software? Like, what is this just are these just giant PE roll-ups? Do public companies just buy them?
Are we talking about going public? SaaS?
What happens?
So I, coincidentally, last night spoke to the PitchBook analyst that covers M&A globally. And he had some really interesting points. He doesn't think interest rates are going to hit 2% anywhere close to when the market thinks they're going to hit 2%. He thinks interest rates will stay higher. They will move down. And
when does the market think they're going to hit? Because I don't think they're going to hit.
I think the dot plan said like some point in 2026. He's like, no, I see these staying higher for longer. Again, it's his opinion. Who knows how it plays out. But one of the things that he was mentioning is that when you look at these vertical SaaS companies that get to 5 to 10 million in ARR, they're not getting sold for 50 because you don't have the TAM. You don't have the ability to become $100 million revenue business. So because you'll get a great multiple if they think they can buy your asset today and grow this asset and then sell this asset to somebody else to then grow further, right? And so if you choose the wrong market, you might find your 5 to 10 million. It might be a profitable 5 to 10 million, but you might get sold like a services business, more like a services business than the traditional tech company that one thinks of, where your multiple is on revenue and is somewhere between, 6 to 10 times revenue. That's hard if this business theoretically cannot generate 100 million plus in revenue. It can get there slowly, it can get there profitably, it can get there at snail speed compared to the venture world, but it's got to be able to get there. Otherwise, you get 8, 10 times EBITDA.
Yeah, I mean, we all know vertical SaaS founders and CEOs. How many of them have sold their company in the last 2 years? None.
I would say this. So there's a company. Do you guys know Constellation Software? You might know Constellation, right?
Well known. Yep.
So Constellation
Hathaway of Canada.
There you go. 87 billion market cap. They basically just buy these small ones and they put them all together in various different verticals. And they've acquired a ton of companies in the last 2 years. Their stock has also performed really well. I think in the last year, it's been up 52%. Over 5 years, it's up 227%. Like, this is a company that's acquiring aggressively and doing a really good job at it, but they're acquiring with discipline.
Do they acquire American companies or just
we built their sales team for them for Constellation itself. because they obviously cold call founders and like, you want to sell your company. So we built those teams. When I was a recruiter, I built their first sales team actually myself. And then we obviously helped the portfolio companies. But yeah, they're super aggressive, acquiring tons. Sam, I found some other data, which was basically around the venture market. Carter reported that 1,287 new funding rounds took place in the second quarter of 2024. It was a 4% quarter-over-quarter increase. The total dollar value invested was $20.9 billion in Q2, which was up 12% from Q1. And down rounds hit a sixth-quarter low. So it seems like that tech market is now starting to come back. Like there's some energy in the market again. Things are moving in the right direction. Lemkin has spoken a little bit about how there are a couple of companies that have had really good results as well. He highlighted Shopify, Datadog, Abnormal Security, etc. When you notice this setup of what we just discussed, the NRR and go-to-market efficiency data that David shared, contrasted with some of this other Carter data, how is this informing your capital allocation and general thinking and advice as well to other founders? Feeling good about the future?
I feel, yes, as me and AJ talk about this all the time. We are both aware. I think the three of us are all aware that we're in the market and that, there's this attribution error where we think our results are 100% because of us. And of course, there's luck. There's the market involved itself. Do I feel good about the future? We have grown executive ARR 10 weeks in a row at Pavilion. Churn was at a 2-year low in July. I feel the best I've felt about Pavilion in 3 years. So I feel great. Now, as we're talking, and the other fun fact for those that are listening, I got a text from a friend of Lemkin saying, "Hey, Jason's annoyed with you that this build your business the traditional way narrative is taking hold.
I love you, Sam.
And he wants you to stop it."
Just in the public face. Okay, let's go.
Well, I'm not talking about my private life going forward anymore, but I will talk about work stuff.
He's definitely less annoyed with you after this comment. I'm sure of it.
Well, the reason I'm bringing it up, he didn't even say it to me. So, whatever. That's not the point. Here's the point is, the thing that's in my mind is what creates more gains for the economy. Is it more venture capital backed companies going for gold, going for the home run, burning capital, pushing as hard as they can? The fact that, and trying to become the next Monday.com, the next Slack, the next Okta, whatever, does that create more productivity gains for the economy? Or is more productivity gains created by founders that on the margin are declining venture capital investment in favor of trying to bootstrap, to the point of what we were just talking about, whether or not they can sell it for 10 times ARR at 5 million? There's to the point of Constellation, there's definitive enterprise value when you haven't raised any outside capital or raised dividends. There's ways of achieving wealth and creating wealth at smaller scales that don't require venture capital. And it does seem like it's on the margin easier to start one of those businesses today than it's ever been. And so is this good or bad? That's the question, because, I got into a text interaction with the person that told me that he'd said that Lemkin had said that. And again, I respect it. And his point is that, people are turning down VC dollars at this point. Like, there's a bootstrapping narrative that is taking hold. Adam Robinson and Santosh from retention.com and other people are talking about, and even I'm collecting some of those voices, in Pavilion. When I was at the CEO Hamptons trip a couple of weeks ago, there's a guy that runs a $13 million business completely bootstrapped. There was Seamus Ruiz Earl, who sold Carabiner Group to SBI, completely bootstrapped. There were CEOs in the room who had no intention of taking venture capital. And then there was a couple of CEOs that very much had taken venture capital. So my question is really like, what's the future of venture capital? Because when I hear about declining, it wasn't not just OpenView, but also Bessemer the people that popularized, triple, twice, double, three times, they're, and really like admonishing us that you can't have a company if it's under 120% net dollar retention. And now we see that like the best companies in the world have 108%. And when most of them probably copied Salesforce playbook of building in 7% increase into every renewal, it seems like if Salesforce has single digit NDR after they've put these shenanigans into their contracts, what are the rest of us supposed to do? And that is not a existential problem for whether a company should exist, but it does seem to be a pretty fundamental problem for how venture capitalists should think about market creation and pricing models around SaaS. And again, as we've said in the past, the future of SaaS. That's where, when I hear about the David Spitz's commentary. We should bring Spitz on, by the way. We're friends.
I've been telling him
with all of us.
Yeah. One of my closest friends, like I text with him like all the time. Like I love Spitz.
No, Spitz face. Anyway, so that's where I come out at. Like, am I feeling good about the future? Yes. Do I need Pavilion to be worth 10 times revenue to generate an outcome for me and the team that is interesting? Absolutely not. I'm modeling 3 to 5 times revenue.
Yeah.
Do I think that Pavilion's going to be worth absolutely anything at all if we can't generate meaningful growth? No, of course not. But I have got time because I'm profitable. And so, again, the place that I think about zooming out is like, the goal is profitability and stability. We've executed that plan really well in 2024. I'm really proud of the work that the team has done. 2025 is about beginning to increase the slope of the curve when it comes to the plane leaving the runway, to use a pilot metaphor, AJ. And then 2026 is about approaching cruising altitude. And 2027, 2028 should be about we're at 35,000 feet. You can unbuckle your seatbelt, get a refreshment if you like, use the restroom because you've been holding it, and
then AGI gets released and we all take a nap.
And the whole point is like, hey, can I build a company that's around till 2027? I'm, right now, all signs are bright green. And even, our events business, which can be a little problematic, I have lost the existential fear because every month the contribution margin of our core business is positive, which tells me that like the business is positive and profitable. I could make it more positive and more profitable, but right now that's a great thing relative to where we've been the past 3 years. And we'll continue to improve. Now,
and the machine is working. Like the machine is working.
Seeing Kyle Norton,
I was just going to mention that. Oh my God!
Starting this Pavilion Clubhouse in Toronto, and I've got a call next week with WeWork to do the same thing in our flagship chapters, and beginning to build like physical spaces for Pavilion members to congregate. And really, anyway, I'm extremely.
I love that. By the way, I think I love that Toronto was the first to do it.
London was the first just to be.
They had a clubhouse.
Oh yeah, Nicholas said it.
Tom's a gangster. Okay, so we're the second to do it, but I'm glad that we did it because I think it's just super cool. And in a world where there's all this remote work, because Toronto has a lot of remote work, right? Like you have all these US companies that want to hire people in the same time zone as East Coast for 30% less because of the exchange rate difference. You've got sales for all these companies here, and they all have to work from their pokey apartments. And now they have a place they can go and hang out together. I think that's so cool.
We should have a segment where we just like read our top texts from people that we got. I love this one. The Jason Lemkin one was great. So I've just got all these texts favorite? Here. Let's just my favorite text.
Yeah.
Well, I actually got a text from Kyle Norton today. He said, "Loved your stuff on the pod about taking a beat when you react to things. I just had my leadership team read Master of Change. And we're doing it for book club across the broader team next. It's a great one. This is one of my favorite frameworks from the book. It's his chapter on responding versus reacting.
He's very good at teaching his team how to like mindset stuff. Yeah, and he comes from an athletic background. I think he owned a martial arts studio as well, which obviously would have helped with this type of thing. With him.
That's for sure.
I think what's good, there was a guy that worked in his sales team, and everybody has to read Obstacle is the Way by, what's his name? Jason Holiday?
Ryan Holiday.
And one guy went and got a tattooed on his arm or his chest or something. Like it was so ingrained in them. I really like what you spoke about, Sam, in terms of more companies have more opportunity to build, because previously it was like there was obviously starting capital available to venture fundable businesses. I just think those businesses will always be there, but now there's a little bit more momentum for the others that are just not interested in running that type of business or building that type of business. I don't want to operate a business that's growing 300% year over year. That's chaotic, and the job is just trying to minimize the chaos, and it's not fun for me. Like, I'm not excited to do that.
I'm gonna wait a second. Actually, I disagree with that comment.
It's a very personal comment. Subjectively, I don't want to run a business growing at 300%.
How can you disagree with that? No, I said you do want to run that kind of business. You don't know yourself.
Well, I think, okay, fine. For more broadly for startups, I mean, every startup that we've ever been a part of has always been an S show, right? Like, it's always a mess. And the chaos is that uncertainty. Like, we as human beings, we have all of these core values. And one of those is certainty and safety and security that we want for all of our employees. But another one is uncertainty and variety. And all of the progress, all of the value is in the chaos, is in the ambiguity. Innovation is created in the chaos.
Well, let me ask you both this question, because this is the fundamental question. It's not about, I agree with you, Asid, that, it's nice to have choices. It's nice to have options. And maybe there's like this theory of the case that, like, if the bar is here, if the bar is very high to start a company, meaning like to start a company, you must raise venture capital. Therefore, you must set your ambitions to the stars. And people that wouldn't have set their ambitions to the stars must adjust their ambitions upwards, because that's how you get the money to start a business. And now the bar is lower, and you don't need to necessarily raise as venture capital or as much venture capital in order to build a business. But the challenge there is there's two questions fundamentally, and I know we're closing in on time, but two questions are, one of them is, does that structure lower the number of quote unquote unicorns? Like, are fewer great companies created because there are options for people that want more nominal growth as founders and CEOs? And then the second and related question is, and whatever your answer is that better or worse for the global economy? Are more jobs created? Is more productivity gained when everybody has to shoot for the stars? Or is it better for the economy, despite what the venture capitalists want you to think, that there's more options, even though these companies, by definition, remember, they're going to employ fewer people? You know, a profitable, efficient growth business is not going to employ 1,200 people at, 30 million in revenue. It's going to employ 200 people at 30 million in revenue, because it needs to be profitable. So what do you both think?
Well, here's some data. In the US, 61.7 million Americans, which accounts for 46.4% of the private sector workforce, work for small businesses. There's a lot of jobs in these small businesses because there's so many of them.
But the world has been changed by the big businesses.
The world has been changed by the big businesses. And I think people there's always just been a year-over-year increase, or maybe every 5 years, there seem to be more people that are coming up with those big ideas and have the infrastructure and support to be able to pursue those ideas and build amazing, world-changing businesses from those ideas. I don't think I think those people have the vision, they have an idea that they want to run with, and they'll have more support to be able to do that. I think having the ability for other people that have other desires of their life to be able to start something, make it really productive, and be additive from a value perspective to the world, I think having more opportunity over there is also a net positive. I don't think it's going to be one or the other. I think both can be vibrant parts of the economy. I think, of course, you need the Steve Jobs and Elon Musk of the world, but you also want these 61.7 million people to have businesses to work for. And so I just like that this other side of the spectrum has a little bit of limelight and momentum right now.
I mean, all of these companies have started out small. I'm actually surprised that it's that. I would have thought it would be closer to 80 to 90% are working for these smaller businesses.
Huh?
Well, when Salesforce employs 130,000 people.
I mean, that's fair. And Denver Airport is the biggest employer in Colorado.
Is that true?
Yeah, true story.
That's really? A great little. We
Denver
got some
Airport.
Factoids.
Got some factoids. Walmart is like most of the states.
Did you guys? Do you know that in 2025, so next year, more people will be working remotely in the US than all the employees across the S&P 500 companies globally put together. And that's a 4x increase since 2019. It's a different world.
I know that.
It is a different world. I think it's time for shout outs and wins of the week. Who wants to go first among my esteemed colleagues?
Let's go alphabetical. AJ, you go.
Oh, called on first. I'm going to go with the win of the week. I'm going to change it up. I'm going to give a self-congratulatory shout out a little bit. No, this is a shout out to, well, I'll start with the win of the week. I have been working for the last week and a half on a company offsite presentation that I am giving on next Thursday. And really, really spending a lot of time honestly, in the conversation that we're having today, in like, what is the 2026 and 2027, but then able to bring it back to the team and truly make sure the narrative, the story is connected to where we are now and the work that we've done and all we've learned, all the great, there's a lot of momentum, a lot of successes that we've talked about on the show for us. And I worked with a guy, Simon Bowen, he runs this mental model. He lives in Perth, Australia, which is 12 hours difference. So I've had 3 6 a.m. calls with him, and they've been 90 minutes, and they've been huge unlocks in framework, and just really excited to give the team a lot of clarity around the organization and some of the awesomeness that we're going to go out and do and how we're going to change the world. I have to be careful. Like, I can't be too aspirational about it, but I've never been more excited about
You're
what
certainly going to change the roofing world.
The RoofCon 2024. Watch out, we're going to crush it.
Is it in Vegas?
No, it's in Orlando, which I'm not sure is any better.
Live Topline from RoofCon.
Yeah, RoofCon. Well, it's 2 weeks after Enterprise GTM, so I'm going to be like ready to go for RoofCon after all the craziness that we're going to get into in Austin.
Enterprise GTM is the course you're teaching. Go-to-market 2024 is the conference you're attending.
Thank you. I didn't want to correct him. He's been so enthusiastic. That's okay. He's a good person.
I just taught that course last week as well.
Did you get your ratings?
No, but I was very clear that I needed to score higher than you during the course.
Impossible. I was perfect. Okay, I'll go next. I was actually going to talk a bit about the observation that I had around the benefit of writing long form, but since we already spoke about that, let me talk a little bit about sleep. So I've really struggled with sleep. I do not sleep well. I used to sleep really well when I was young, so I never really developed any skills around it. It just came natural. Maybe I didn't have a very vibrant life, but as life got more interesting, my sleep just basically deteriorated to a point where now I sleep less than 5 hours, maybe 5.5 hours on a lucky day, and I wake up a couple of times in between. So I feel very lucky to live the life that I live. I think if any of us got to choose the types of lives we live, our types will be, right up there of the choices you would make, like a dynamic life that has high highs and low lows and all these sorts of momentum-y things along the way. But you have to learn how to manage your nervous system as well then. That I think is a critical part of it. And for me, that's sleep. I need to figure out how to sleep well. And so I've tried pillows. I've tried various like naturally pills. All of it hurts a little bit. But I recently downloaded an app called Sleep Cycle, and it has a really creepy feature, really creepy. It basically records you while you sleep, your sounds, and it's super creepy. But
how does it wait? Is it just records the sounds, not the video though?
Yeah. So anytime there's a sound, like it activates the recording feature and it'll record it. So what happens over a certain period of time, I've done it for a couple of weeks, is you actually learn a lot about how you sleep. Like you hear your sleep talking, you hear movement, and it's able to give you some really interesting data around the quality of your sleep, the amount of deep sleep you're getting, the amount of movement you're having, the amount of coughing you're doing, your breathing during the sleep, your heart rate during the sleep. And it's really been informative to me. I am able to then track back and say, okay, what were the things? I generally would have really bad scores like 60s and 70s. But then on the days that you miraculously get an 85, you're like, let me reverse engineer here and figure out how I got there. And I just understood a couple of things about myself that have actually made a bit of a difference. I'm sleeping a bit more. I'm a little bit sharper, and I can work out a bit more, and I can enjoy life a bit more. So it's creepy. Don't keep it on forever. But for those that struggle, it's worth downloading and keeping it on for a couple of weeks to just learn a bit more about how you sleep beyond just movement. So that's my shout out. Maybe sleep cycle.
I love that. I'm going to just give a PSA, everybody. October 14th through 16th, as AJ was mentioning, we're all going to be in Austin. It's going to be an incredible week. And here's a few reasons why you should come. First of all, we have market commentary. In fact, one of the things we might want to do is invite him on the show, but we've got Benedict Evans, who used to work for Andreessen, is sort of in the vein of Mary Meeker, gives these 200 slide presentations on the future of technology in the world. And he's going to be one of our keynotes. AJ, Asad, and I are probably going to be recording some Topline episodes while we're down there. The first day, which is Monday, October 14th, we're doing a women's summit. That's apply to attend. Not everybody can sign up. You have to be a currently employed operating executive that identifies as a woman, but it's going to be an absolutely incredible group of female executives. And then 15th and 16th, we're going to be doing GTM. We're going to have Chapter Wars. We're going to have a special Spotify playlist curated by me and Aaron Leader. We're going to have all kinds of fun activities, and we're going to have a bunch of incredible networking sessions and a bunch of fans of and supporters of Topline are going to be in attendance. So, including people like Peter Walker and Mark Roberge. And others. So I would encourage you to get your tickets. Get your tickets to GTM 2024. It's our big event, and it's the one that we're most excited about for the year. And it really sets the tone to kick off and launch into 2025. So I hope you can attend. It's going to be an absolutely great event. Go to joinpavilion.com to learn more. We're going to have a special Topline community gathering at the event. So you can meet folks like Charlie Moss and Ryan Burke and a lot of the people that are contributing actively within the channel. And it's just going to be absolutely fantastic. Austin, October, at the end of Austin city limits. So live music, there's an F1 race, there's Texas-Georgia football game. What more could you ask for?
There's the new comedy club.
Barbecue.
There's the new comedy club.
I'm so excited for Austin.
Yeah,
I'm super excited.
Lex Friedman lives in Austin. He's going to be attending. So really, everybody's going to be there. Elon's going to be there dialing in. Kamala's going to be there. It's going to be great.
I keep finding myself looking at real estate in Austin these days. There's something about that city. It's a good spot to have chosen.
Yeah, tax structure is very favorable. All right, folks. Thanks for listening. We'll talk to you on Thursday for Topline Hotline.
This episode was brought to you by AirCall, the business communications intelligence platform. Deliver a better experience for your customers and your teams at AirCall. That's AIRCALL.io. Save time, save money, and improve performance with a single communications platform.
Thanks for listening to Topline. New episodes come out every Sunday. If you like what you heard today, subscribe so you never miss an episode, leave a 5-star review, and share it with your friends. Don't forget to join our Topline Slack channel to connect with us and discuss the topics we cover with other listeners. Click the link in the show notes. Lastly, if you're interested in joining Pavilion, you can learn more about membership at joinpavilion.com/membership. Thanks again for listening.